All right, here, everybody. It's Axe with Cake Trades. Today, I'm going to just do a video version of all the shit that I go through on a daily basis after the market closes, just to give you an idea of my process and to try something new. So this will be for today's the 4th of June, and this will be for next week, which is 6/6/22. Right now, I have RSP over SPY. I have an RSP again is equal weight SPY, and this is a ratio. So when I say RSP over SPY, it's basically equal weight SPY against SPY. Ratio charts are something that you should use. They're something I use quite often. They sort of give you different ways of looking at things that maybe you weren't able to pick up on a normal chart. And sometimes they sort of disclose what what big money's doing. That's one of the ways I can track mean reversions and other big moves up or down. So I have SPY up here. I'll keep SPY or Bitcoin, a lot of my charts up up top, just to give me a different look, and to, whether I'm looking at fractals or just I want to see what SPY is doing in this case as RSP over SPY makes its moves. So we've talked about, I'm in a weekly chart right now. I talked about how we sort of had this inverse head and shoulders, and I can draw it out here. Right, and we said basically when RSP over SPY, when this ratio breaks down, that means leaders are leading, right? And that typically is a sign of not, I wouldn't say bad breath, but I would say it's a sign that leaders are doing what they're supposed to do, which is leading the market forward, right? So when you see a move like this, this is leaders, giving way to sort of value stocks or that's a sign that breadth is strong. And when we come down here, you can say, leaders are leading, right? So the equal weight stuff's coming down, leaders are going up. So when I say leader, Apple, Tesla, Amazon, stuff like that, right? Things that are heavily weighted in the indices. You can see here that, RSP over SPY, this ratio can go up and the market can go up. It can go down, the market can go up. It doesn't matter in that sense. But long term, right, we want to see, for the health of the market long term, we want to see this go up because, it means that the diverse offerings of the stock market are going up in tandem, right? So typically you'll see this ratio go up and then fade, and that's okay. But when we start to see like here, you'll hear me say the market really topped in like May of 15 sometimes, right? You can see here, basically we've been down into sort of COVID from May of 15 to May of 20, so about 5 years of like shitty breadth, and that's why a lot of the times we're looking at the charts of the leaders, Apple, Tesla, Amazon, all that stuff. Again, those were going up, and you start to see some of the stuff. It could be industrials, it could be energy, it could be a lot of different things that start to fade. So it's just a broader view of this ratio chart. And so what I'm looking at here is we were looking at a breakout, which meant breadth was picking up, and to be honest, breadth picking up coming out of a correction like we've had is a good thing, right? We want to see breadth pick up, because if we saw this ratio going down and a divergence, so to speak, right? If we saw this ratio going down as the market was going up, we'd say, okay, we're not really ready to recover from this. One of the things that I've always said for the past year or two is that I want to see a strong breadth-based rally or recovery in the market, that I want to see everything sell off together and then bounce together. And so this chart going up would be a sign that yes, things are bouncing. And you can see we started to break out here. We pulled back, and now we're sort of sitting right on top of this trend line. And to me, that says, okay, breadth maybe looking good here, and we can bounce out of this. And if you scroll back, you can see back to this July of 2009 here, similar thing. But we, on the negative side in 2007, we, it was also the similar thing, right? So prices were coming out of this hole, and we sort of round bottom, just like we did now, inverse head and shoulders, whatever you want to say, and we tried to break out here and it didn't hold, and that's when things started to break down into the GFC. So we have a couple different looks, right? We could say, okay, in 2009, we bounced out of this and breadth improved and recovered, and the market came with it. Or we could say, we got up here and we couldn't hold it, and the market went into a huge recession or a huge bear market. So what I'm watching is number one, is this sustainable? And you can see I've already started to plot some divergence here, and this divergence is what led into like the 2010, 2011 selling. The market was trying to go up, breadth was improving, but the technicals were declining. So that says, okay, we're going to have a correction at some point. So right here already I see some divergence forming. Again, you see it was a couple of years before this manifested, so it doesn't mean anything in the short term. But it's something that we look at and say, okay, if we're going to hold this breakout in this ratio chart, that means that maybe buying Apple, buying Tesla, Tesla was down, I think 9% on Friday. Maybe that's not the way to go. Now I can start to pick up some of this other stuff, the value stocks, some of the stuff that's been beaten up for years, right? Some of the stuff that hasn't bounced, and maybe it's time for that stuff to bounce first, because leaders have held strong. They've sold off, but not a ton. So that's just something to watch. And so when I look at this ratio chart, I would say for Monday, for example, I'd say, okay, let me go to the daily. I'd say, okay, we sort of faded. Leaders were rallying during this time, and that's when the market started to bounce. And you can see, I would say this ratio has started to bounce again, or try to bounce, and that's when we got our selling. So what we need to see, and it's kind of a paradox, but we need to see leaders bring us out of this, and then we need to see the growth continue to go up. So we want to see higher lows, which we're seeing, and we want to see higher highs. And so we want to see the market climb out of this, and we want to see this sort of chop its way out. That means we have strong breadth, but leaders are doing what they're supposed to do, which is lead. Going into Monday, I would say there's really not a lot we could do here. This doesn't really give me a lot of information, so I would pass on an analysis based on this chart. I would say, okay, we're at a spot now where we need this to hold. We want to see breadth improve, but that may mean we see some back and fill here on SPY. So I would say this is sort of ambiguous, and there's not a lot to take from this chart. Again, that's RSP over SPY. So I'm going to look at SPX breadth, right? And let me just turn this off to make it easier. And this is a chart to me that tells us quite a bit, and you'll see me refer to these charts a lot. S5TH is the ticker on TradingView, and I'm on a daily chart now. You can see we are not, when I say breadth didn't confirm sort of the price action, that's what I mean is like we're this almost looks like a bull flag up here on SPY, and this is definitely sort of selling off. And so I would say, looking at this, like we left a wick here. This, to me, these three candles, this three candle formation is like a reversal shape. Maybe, again, candlestick formations are not my specialty, but almost like a dark cloud cover or something like that. But, this is a bearish engulfing confirmed on Friday's candle, and I would say we want to come down here and fill this wick, and we've got some gaps to fill. So to me, that's a bearish look on SPX breadth, and this is stocks above the 200-day, but SPY didn't really show it. And so to me, that says Monday we could see this weakness manifest into price, right? So we saw some weakness here that didn't manifest on Friday, so to speak. I mean, we were down, but not nearly as much. So we'd say, okay, maybe Monday this is going to manifest, and it might switch to a 3-day chart here just to give us a better view. That's not a horrible look. We could chop around here, kind of like we did in this range. So I would say it's not outright bearish, but it's not super bullish either. And you could even argue that this is a bit of a bear flag. So I'm watching to see, okay, are we coming out of this sort of like we did around here in December of 18? I'm sorry, January 19. And you can't really see it on the weekly chart. If I go back to the daily here. A little bit similar here in March, April of 2020, and again in December 18, January 19, right? So we have a chance of forming this little stud, or whatever you want to call it, off the side here that leads to that sort of V plus one bounce. But we're watching that, right? We want to see that confirm. Right now, to me, on a daily, that doesn't look great. On the weekly, it's okay. But, we're still sort of below this resistance. So that's what I'm watching. And again, I just have some gaps and wicks annotated, but just so you better understand what I'm talking about here. You can see there's a range here, right here, here, and here, right? So you could say, okay, we're looking like we may have broken out and we're back testing it. So that could be positive. So that's something I'm going to watch. I'm going to watch this ratio on Monday and see how it performs. Let's look at the NASDAQ breadth. And again, I'm just going to hide the annotations here. I could switch to QQQ up here if I wanted to, but I'm just not going to. It's not worth the time. But you can see, again, we're under resistance here, and that's at like 27, and we're well below it. So I would say, okay, does NASDAQ confirm the SPX look? And to me, NASDAQ was actually, go back to the daily. It's not so bad. It's an inside doji, and a lot of typically inside dojis tend to imply continuation. So you could say, all right, we're building some momentum here, and we could be ready to break out and try and go after this 26, 27 on this chart. So I look at this and I say, it's not bullish, it's not bearish. It's a market needs to tell us what it wants. And, we're below resistance. So I'm going to say until we get above this, I'm not super bullish, but it's hard to be bearish here because we don't really, there's 3 green candles out of 5. If I go back to the 3-day chart, it's a bullish engulfing here, and this just started on the 2nd, so we only have 1 day on this candle, so we got a couple of days left, but so that could reverse, whatever. either way, you could say we're building a top like we did here in March, or we're getting ready to break out. So again, this inconclusive. And when we're inconclusive, I try not to make a trade or lean too heavy on one side of the bias. Just like I said Thursday night, I don't really have a bias into Friday. It's similar here. The market is in the middle of a chop zone, and the best trade sometimes is just waiting, right? So we would say if Nasdaq breadth gets above here, we close above here Monday, Tuesday, something like that. Okay, now we can buy, even though we're halfway up. This, from the bottom here, we're on support. It's an easy invalidation. If we fail, we know we can short here. So that's what I'm watching. Let's take a look at VIX. We've got the 3-day. Let me go back to the daily. To me, VIX is bullish equities right now, because you could say, okay, this is an inverted hammer. This may be a bottom formation or like a reversal look, kind of like we had here on January 12th or January 4th. And we're sort of right on top of this pivot area. So there's a chance this could hold on. But typically when you're in a downtrend like this, it is an inside candle, but you certainly wouldn't buy this chart, right? If this was an equities chart, you wouldn't buy this and say, I can't wait to get long here. I mean, you might buy it and say, hey, it's an easy invalidation. I'm going to buy 25, and if it breaks lower, I'll close the trade. But to me, this is a sign that VIX may want to break down, in which case that's bullish equities. That's a tailwind for equities, and so we get excited about that. Real quick, go to the volatility of VIX, and again, there's nothing really bullish VIX here. It looks like it wants to continue to break down and go lower, in which case that's a good thing, right? The lower this goes, that means the less VIX is moving, which means markets are more predictable and easier to trade. We were having like 100-point swings the past couple weeks. I know we did have a 100-point rally out of nowhere. I think it was Thursday, but in general, like our down moves haven't been as massive as they were in the past. So things are starting to settle, and that could be a good thing here. It's the same thing that happened in January of 19, similar in 2020, although it took us really, if you think about it like this, we're just now breaking down VVIX, and this is something I honestly didn't predict. We're breaking it down from basically this whole post-COVID high volatility regime, and if we're going to break it down, that could be a sign that we have some stability for a while. It doesn't mean that we're not going to see some corrections or some selling, but if you look at this, when VIX or VVIX starts to break down like this, that's a positive sign. It's broken the trend, and it's going to be a while. Maybe we're going to get a longer duration rally. And so to me, I came into this video today, with a slight, to be honest, I would say I wasn't bullish, but I was probably leaning like maybe we sell the rip still. But, some of this stuff is starting to together look like it's possibly bullish for equities. So that's volatility of VIX. And I'm just going to pull up a SPX chart here. And you can see it's pretty simple, right? Breakout back test. We have a little wick. That looks pretty good. This NASDAQ chart, this wedge is sort of like a noob wedge, to be honest. Like it's pretty, but it may not be a wedge. It could be more of a something like this megaphone, right? So we could come up here and down. So it's possible, and again, I'm not going to forecast, but maybe if we're lucky, something like that. So that's one option with the NASDAQ. But again, we're above this area here, and I would call that, you could say this is a fake breakdown or an underthrow if this holds. So that's not a bad look, to be honest. Let's look at the Russell 2000. I've got like an Elliott wave impulse up here. That looks pretty good to me. Go to the daily chart. We're losing some momentum here, and we're under resistance. Again, we need to see us break through this to get really excited, but there's a chance here. I would say the weekly chart doesn't necessarily look that bad. We may come down and fill this wick and double bottom. I think it's my preferred scenario, but you never know. And let's look at Dow futures, similar as everything else. Now let's look at Dow transports. This is one of the charts that I'd like to see firm up a bit more. Let me go back to the daily. You can see we're stuck in this chop. We really want to see transports breaking out and leading the market, but it's not bearish either. It's an inside day after big green candles, so that's common and fairly rational. So I would say we're not out of the woods yet, but it's not a bad look. Let's look at banks, XLF. That's not my favorite look for banks. Banks are something we want to see, financials, we want to see them strong to support the market. But, if I was to just, again, go back to trend line magic here, and I always say trend lines, or I'm sorry, support resistance, they're more of a range than a level. So I would say we're in a good spot to try something here. You could say that's a back test. The wick is filled. It's a back test. Maybe we're getting ready to bounce out of here. So I would say this is going to be a telling day. If we come back down here and fill the gap and hold it, that's still okay, and that's a good thing. If we get below here, below this 34.40 level, that's problematic. So let's go to bonds, and bonds typically have an inverse relationship to financials for a lot of reasons I'm not going to get into here. But we tried. I thought maybe it was a bear flag, and we were going to do something like this, right? We're going to watch. Switch out of this so I can get SPY back up. You can see, for the most part, with the exception of March, right, as bonds have gone down, the market's gone down. So if bonds can start to stabilize, that means rates are going to stabilize. It may mean that financials struggle or chop a little bit, but financials can still go up with the market, even with bonds going up, because of the risk-on appetite. So bonds going up doesn't necessarily mean banks are going to sell off. So if we can get bonds to bounce here, and again, we're in we switch to the weekly. This trend line is something I've been tracking. Again, we're on TLT. This is not so bad. You could say maybe it's a channel. Maybe it's not a flag. Maybe it's a channel or whatever. So we're still in good shape here with bonds. We want to see them continue to hold this area and this trend line and bounce, and that would be strong for the market. You can see, like in 18, bonds bottomed and then the market started to crater. So bonds bottoming isn't always great, but in general, we don't want to see bonds cratering, because that tends to be, an issue in terms of rates. And speaking of rates, I'm going to pull up the 10-year TNX, and you can see during that real strong move here, that's when the market really began to sell off, as rates really sort of got out of hand. But we're capped here around this level. You could probably see an Elliott wave impulse out of this, and I think we're due to come down a little bit. And there's, just from a standard chart perspective, we're due to back test some levels here. But I always said if yields will stabilize, they don't have to necessarily stop going up, but if they can stop going up so fast, that's a positive thing for the market. So we're looking at rates here. We're looking at TNX, and it's a possible bull flag. And again, the market can bounce with rates going up, but if rates start to explode higher again, it could be problematic, because that's going to start to put more financial pressure and constraint on the economy. So we would like to see this sit around here and not break out, but again, it's something that we're going to watch closely and keep an eye on. I'm going to go to gold here for a second. And gold, to me, you know my opinion on this. I've felt that metals are bearish, and I still think that basically we came up here and we filled this wick. We did our job. This is going to roll over, and as gold rolls over, gold rolling over doesn't necessarily, to me, others will disagree, but it doesn't necessarily mean, to me, risk off. It means more that yields are going to stabilize. Inflation may be nearing a peak. It means that the risk appetite is going more towards stocks than metals. And I think that's a trade that will probably benefit stocks. It's a good thing for the economy, right? Because when people are panic buying gold, that just means we're fearing inflation. Yields are doing their thing. So I don't think gold going down is a bad thing, unless, of course, you're a gold bug and you don't want to see that. But, we saw in 2012, we saw gold come down like this for a long period of time, many years, and the market did not have a problem with that. So to me, the bigger issue is gold sort of exploding or being unpredictable. We don't want to go into a period of hyperinflation. We want, if gold can chop here for years, that's great, because it still has strong value, but it's and we have a high risk appetite, but we're not fearing hyperinflation. And I'm going to go to silver real quick too. Silver, I think, better confirms my thesis, and you can see that if I drew a line here for resistance, we're below it. I think this is going to curve over, and we're going to fill this liquidity zone here, and I think probably go down to 1870, and then we'll see. I wouldn't be surprised at some point, if it's a risk-off move or something, if we end up coming down here. But silver, to me, still bearish, and I still think that metals in general are bearish. So I guess I could pull up crude real quick. I'll switch to the area chart. We have a breakout, and that's why gas is $5 a gallon here in Florida. But we're working on maybe some divergence here, and I think we're getting to a spot. We may come up here and feel this 146. I mean, it could take some time, but that's something I would watch. But in general, 2, 3, 4, 5, we're getting close to, I think, finishing this impulse and coming back down to the 65 to 75 range. It's going to take some time, but when that happens, I think that's when we're really going to see a bottom in the markets with equities, and we're going to see risk-on movement. And I think we're close. I think that, again, let me switch back to the candles and get rid of this. You can see we're even though we broke out in terms of a closing perspective, we still haven't set a new high. So when we do set a new high, it'll probably be divergent. I think we'll probably fill this wick or close to it, and that'll be that. That's just what I think. So that's the market for me in a nutshell. Based on these charts, I would say going into Monday, I am pleasantly surprised at what I saw, and so I would not be surprised if we saw some chop or some further consolidation. But upside I think is probable. But we're at some spots. Actually, let me pull up Tesla or Apple. The Apple chart on a weekly basis is not great. We're below resistance, so that's a negative. But like I talked about with breadth, we were starting to see a breakout in value stocks. Tesla was down 9%, or I guess it closed 7% down last week. Let's check the daily. We were down 9%. That's closing the gap, which is good. Maybe that's it. Maybe that's all we get. If I was to do a quick fib, sorry for the mess here, guys. But we're not, maybe we get down to 683. Was this a half? Yeah. Retrace 50% of that move, so that's not uncommon. So Tesla doesn't look great. Amazon, that looks toppy. That's not great. There's a lot of gaps there. Google, similar thing. Let's look at IWM is okay. BA had a big day if I remember right. Inside day on Friday, big day on Thursday. So let's see Jets. I don't really take much from that chart. Let's go to energy. Energy pretty much matches the crude chart. Utilities, nothing exciting here. That looks toppy to me. Toppy utilities is good for all of us probably. Let's look at real estate. You could say that's maybe a bull flag there. It's tough. Biotech's finally getting perky here. Biotech is getting bottoming, so that could be a good thing. Home builders. We've got a little bit of a flag here. I would call that like a a bull flag, and because it's more of like a channel. Everything messy. Okay, good. So, flag doesn't always have to be like angled. That's your traditional flag right there. So breakout here would not surprise. So I would say in general, just looking through all of this stuff. Sorry if I went too fast, rambling a little bit too much, but I would say in general, things are not as bearish as it felt on Friday. I would say we have room to be able to go up. It's just the market's going to have to prove it. We're at resistance, so some downside would not be super negative. It wouldn't be a surprise, but I think there is a possibility for upside. So to me, there's no trade Sunday night because I'm going to wait for the Monday session just to see what happens, right? Like I need to be above. This is ESF, right? I want to be above this 4196, 4200 to really get excited. If I'm going to go to the 4-hour chart here. I want to be above 4,200 to get excited. Below 4070, things start to get negative. I still think we have this liquidity gap to clean up here at 4280, 4260 to 4280. There's another one up here all the way to 4480. And then these wicks are cleaned up. So to me, we could bottom out of here. Like there's not a lot of work to be done to bottom. I think a lot of stocks have some gaps in this range. So backfilling, coming back down here to sort of retest this would not surprise, and then bouncing. So basically I'm looking, are we above 4,200 or are we below 4070? If not, there's no trade. No trade here. We wait. And that's that. Hopefully that helps. Hit me up with any questions. Thanks, guys.